Hey guys, it's Jeff from the Brantford Realty Group here. If you know me, welcome back. If you're new here, hit that subscribe button and be sure to follow us on Facebook and Instagram. So today we are here and we are back for another mortgage minute. We're going to learn a little bit more and dig deeper into mortgages. And I'm here with my man, my boy, Yarik from New Door Mortgages. How you doing?
Hey, Jeff, thanks very much for having me.
I'm glad I said it right this time. Thanks. So today, what I was going to ask you about is another thing that we've seen online, and you hear mortgage brokers talk about it, and it comes down to what's pre-approval and what's pre-qualified. I know there's a little bit of a difference between the two, so I'll leave it to you to get into it.
Yeah, that's a loaded question. So you know what? There's no particular answer really. I mean, if you go online and you type in pre-qualification, what it's going to tell you is that it's more of a casual kind of approval amount. It gives you an idea of what you can afford. Usually there's not a credit check and there's no documents. It's the information is usually from the client. So if I say, hey, like, how much are you making? The client will say, hey, it might be about $100,000. Let's say $100,000. So it's not an exact number. There's no documents to verify it. So it is user reported. And like I said, no credit checks. It's more of a casual thing. A pre-approval, on the other hand, is going to be something that is going to be more in depth. So you're going to have documents. You're going to have a more intense conversation. You will have a credit check as well. So there's going to be a couple of other things that you're going to have when you have that pre-approval. And, I say it kind of loosely, like what's a pre-qualification, what's a pre-approval, is one better than the other. And it's hard to say because some people will call a pre-approval a pre-qualification, and some people will say a pre-qualification is, whatever. Like I just confuse myself as well. Like it doesn't really, the name doesn't really mean much because everybody uses it in their own little different context.
Okay.
There's also there's levels of pre-approvals. So some people will do like pay stubs and T4s, while some people will do pay stubs, T4s, and bank statements, and some will do a void check. Like for me,
NOAs for self-employed, that kind of thing.
Yeah, exactly. Right. So it really depends on the broker or the mortgage specialist or the agent, whoever you're dealing with, as to like what they're going to do. Like personally, I don't do anything less than all docs up front. Like, to be honest, I mean, if I have a conversation where somebody's like, hey, maybe like a year out and I just want to kind of get an idea of where I am right now so I can work on it, well, we'll do that. No credit checks and stuff like that. But, when someone comes up to me and says, hey, I'm actively looking for a house, like I've engaged a realtor, like this is going to happen, then right away I ask for all docs up front, which kind of says like, hey, I didn't get asked this by my bank. Why are you asking for this? And for me, in this environment right now, it'd be crazy not to ask for all the documents up front because most people are going firm, right? And you want to be sure that this is the number. And I can't tell you how many clients I get from like, and I hate to say it, but like from some banks or other agents coming to me and saying, hey, they told me this number. I gave them the rest of the documents. And all of a sudden that number has shrunk. I need help. Right. So this is why, like, if you have somebody that's asking you for documents up front, it's not a bad thing. It's actually a really good thing. And the funny thing about all of this is I call my thing a pre-qualification. Right. So I hate the word pre-approval because most people, when they see pre-approval, they only see one word: approval.
Yeah.
And that is not what a pre-approval is. Yeah.
Yeah. So so basically it's like jargon or like to some people. So it sounds like a pre-qualified is more like, hey, I got my toes in the water, I might jump in. Whereas like a pre-approval is like, I'm jumping all in, here's all my paperwork. And then the pre-approval comes after you've been pre-qualified already. So after it's sort of gone like to the underwriters or so, like, so like they verified all of the information, that kind of stuff.
Yeah, that's a good way of putting it. Now, the underwriter is not like, so when you have a lender, whether it's the bank or not, so a lot of people think that when you go into a bank branch, that the person that you see, the mortgage specialist, or sometimes like called the MMS, the mobile mortgage specialist, that they're underwriting the deal. or they're underwriting your application. That's not actually, they basically just collect all the information and then they send it to like a central headquarters where the underwriters are. So when somebody says, hey, like, you know, I'm able to underwrite this, people are saying that me as a broker, me as an agent, me as a mortgage specialist, we are looking at your documents, we're looking at the criteria of the particular lender, and we're seeing where it can fit before we actually even send it off officially. So the official underwriting doesn't happen really until you have an accepted offer. We have everything together and we send it off to get it approved.
Okay, so the pre-approval happens before it goes to the underwriter.
That's right. Yeah. Sometimes you'll have certain occasions where you might send something in. An underwriter will quickly look at it and you know, they'll be like, oh, it meets all the boxes. They won't really look into it much, and they'll offer like a pre-approval. And so that's, again, like, you know, what is a pre-approval? What's a pre-qualification? The biggest takeaway for somebody that is looking for something is to just take a mental note of what's happening. Are you giving in docs? Are you having a credit check? Or is it just a conversation on the phone where you're just estimating things? That's really what you should be focusing on rather than that name, because that's going to be telling you. And again, you can always ask your mortgage professional, like, what is this? Is this a pretty solid number, or is this a guesstimate kind of thing? And then kind of use that to judge how you want to structure your offer.
Yeah, makes sense. So now when you get a mortgage, or you end up start talking to a mortgage broker, and you actually, you know, I don't know if it's right when you dip your feet in just to get the estimate, or when you sort of handed in all your docs, that you're really set in for a set date, you know, sort of where you can like lock in the rates of today as opposed to a few months from now. What's the limit on that? What's that all about?
Yeah, that's a nice one. So what we're talking about there is a rate hold, and it's going to be like with everything in the mortgage world, it is dependent on the lender. Some lenders, especially if you go into a branch, for example, and you do an application with them, they can initiate a rate hold basically like on the spot. So once they have that in, it's generally anywhere between 90 and 120 days that they can hold that rate for you.
Okay.
There are some instances where you won't have a rate hold when you do the application, or you get like kind of like the pre-approval. It will happen when you actually submit your application with your accepted offer. And so there's, you again, as an individual, as a client, if your broker, specialist, or agent is not talking to you about this, definitely ask that question. Like, when I do this pre-approval, am I going to get a rate hold, or is it happening after, you know, when we finally submit? Because that's going to be a difference. You know, we've seen a lot of rate increases in the last little bit, and literally between Monday and Wednesday, for example, of last week, we saw a 25 basis point increase in terms of variable, not in terms of the rate from Bank of Canada, but what the discount was from some lenders. And so a couple of days can make a difference. And so really ask those questions, like, am I getting the rate hold now where I have some time to find a place, or is that rate hold going to kick in when I submit that application to the lender?
Yeah. So the rate increase that you just saw last week, was that because of the Bank of Canada, because they raised their rates by 0.25%? Eventually, the lenders sort of like do the same thing, just a few days later, a few weeks later, kind of thing.
Yeah. So the lenders increased their prime rate. And that's what we saw pretty much throughout all lenders. All of them have increased their prime rate by 25 basis points. This lender in particular, they not only increased their prime rate, but they decreased their discount on prime, because when we talk about the variable, it's usually like a prime minus a percentage. So like prime -1, for example.
Yeah.
So prime being 2.7, prime -1 will give you a rate of 1.7. But they reduced their rates. They reduced their discounts to make it prime minus 0.75. And so that means the effective rate is going to be a little higher. So as to like why they were doing that, it could be, you know, shareholder season, or it could be whatever that they might want to do. They want to pad their pockets a little bit more, or looking at, you know, the economy and whatnot. So could be a number of reasons for that. But yeah, it just goes to show you that a couple of days could mean quite a bit of difference in terms of the rate that you pay.
Of course. Yeah. Now, can clients count on a pre-approval?
No.
No.
They are worth probably less than the paper they're written on. And this is why I hate that word, the pre-approval, because everybody just looks at that and says approval. That's all they see in that. Um, so like a pre-approval is really just an affordability check. That's all it is. It's an affordability check, and that's what you have to think about it. Is most people, when they see a pre-approval, they think that this is the lender committing to them that they are going to close and fund the property, and they can get into a bind in a number of different ways. But one thing that people forget about is there's that little step between when we apply for the mortgage and we close it, and that's called the appraisal. And so sometimes the house can auto appraise, meaning that, the value, the price that they paid for the house falls in line with what, is probably the fair market value for that house. But in today's market, we're seeing that sometimes the prices that people are paying for homes is on paper much higher than the quote unquote value. And so that will trigger an appraisal from the lender saying, hey, hold on. Are we going to, is there actually enough value in this house for us to lend you this money? Because we don't want to lend you more than the house is valued, because if you default on the loan, we're not going to get our money back. That's essentially what it is. Right. And so when you look at a pre-approval, it's an affordability check. And again, depending on the level of the pre-approval, if you're just submitting like one document, that's not very good. If you have all your documents, it's a pretty good idea of like what you can afford. But that second part, the appraisal, is something that we can't really account for until you make that offer, right? And if the property value comes in low, then again, they might not fund it if you don't have enough money to make up the difference. And so again, that pre-approval is nothing.
Yeah, you'll have to make up the difference. If the bank only gives you, $150,000 and you pay 200,000, you're responsible for that next 50 on top of everything else that you just, like all the other information, down payment, everything, closing costs, that's on you, right? So that is always a big risk in these multiple offers and people just going in firm. Have you seen like the appraisals actually come in any lower? Because like at this point, even like it's tough to go back 60 days, or like you go back 60 days, we're in February, or we're sort of in January, which is totally different than the values in February. And now the market seems to be, every month it's a little something different. But I haven't heard of too many appraisals not coming in at what the house is going for, because we're in such a crazy market, and with the banks have to go off of what some other one sold for like a day ago. Like,
yeah.
So we're all sort of just flying by the seat of our pants here, right? So, all right. Well, I think that answers everything on the mortgage pre-approval side. And just say, is there anything else you think you might want to add? When is a good point to sort of dive more deeper into it? As like I say, go from just being qualified to sort of, hey, here's all my information. Like I'm gonna give you a box full of all these papers, NOAs. Here you go.
Honestly, like if somebody says here's a box of papers, I'd be more than happy rather than have no papers.
Yeah.
It's funny when you talk to a mortgage broker, like we love organization. We have to be organized because there have been situations where I had a first-time home buyer, and I'll never forget this first-time home buyer that was purchasing a condo in Guelph. And I had 170 pages of documents for this one purchase. And like, it stemmed from everything. Like there was a very, 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 very complex situation that they were in. And the lender wanted to see everything. Right. And so documents prove something to the lender. If you get, for example, if you're separated, a lot of people don't say, the banks, brokers, whatever, will ask for a separation agreement. And that's something that like catches people off guard.
Yeah.
And so, why do we need that? Is we need to make sure that there are no payments either coming in or going out. I mean, if they're coming in, like great, we can use that for increased qualification. But if they're going out, that's going to affect you. And usually that conversation, again, depending on the skill of your broker and experience, and also the conversations that you have, that might not come up until later, right? And if it does come out till later and you have a firm offer in hand, you can be in a boatload of trouble. So, if you come up to a broker or mortgage specialist or agent that's asking you for a lot of docs, be happy about that. It might not be the experience that you think you're going to have, and mortgages, the real estate is the sexy side. I'll be honest with you. The real estate is the sexy side. We're mortgage brokers. We're in the back doing the dishes. Like it's not at all exciting, but it's super important because everyone's going to be, eating off dirty dishes if we don't. So that's the thing, is that we have to do all that crazy stuff in order to make sure that there are no speed bumps. And the more documents we have, the more we can prepare for any kind of speed bumps or help or mitigate those things before they even show up, and then account for it later on. So sometimes we don't want all docs up front because for certain situations we don't want those. But so just follow your broker's advice. And submit the docs, and the more timely, the better. Docs are great. We love docs.
Timely manner, not the day before closing.
Oh man, it's not gonna happen. I'll be honest with you. Like for me, like I love having things done. I like boring.
Yeah.
I like boring, right? When it comes to closings, boring is the best.
Yeah.
Because if we can just sit back and be like, congratulations on a very smooth closing, that's the best. If you're on the phone, you're like, that's no bueno, right? Like nobody wants that. So the more prepared we can be up front, the better. So let me ask you this. In the home buying journey, when would you advise a client to get a pre-approve or a pre-qualification, or talk to a bank or a broker?
Well, I would probably recommend, as most agents would, is that you talk to a mortgage broker before or at the same time you're talking to your agent, so then you guys can coordinate. And usually, what I like to do is I like to get in touch with my client's mortgage broker, because not every time they're not using my guy, or you for that matter, maybe in the future. But so the thing is the communication between the mortgage agent and the real estate agent, because once those two cogs are working together, you're able to figure out exactly what you're looking at. And so I was talking to my neighbor, like I said, I've just been living in Brantford here for about a year now. And she's moving, and she told me she lost out on 26 offers. I was like, oh my God. Like my jaw just like, it's like, as an agent, what do I say to that, right? And I was like, well, what I'm finding is that a lot of agents aren't setting expectations, right? So, and the expectations really come from the pre-approval amount. So they're saying if you're qualified for, say, 650, and and the agent knows this, right? You shouldn't be looking at houses that are at 600,000, because things are selling for $200,000 over asking. So all of a sudden your $750,000 or $650,000 approval is now, you're looking in the mid fours or something like that, right? Like it really dramatically changes. So you have to sort of get both of your mortgage agent and your agent working on the same side together. And so that, should things ever hit the fan, you both, know how to talk to your client and get them to do things, or to set expectations on both sides. Because again, going through 26 offers, like my heart breaks. One, I feel sorry for them. Two, I feel sorry for the agent. I'm like, that guy's put in a lot of work, or that he or she, or whatever pronoun, put in a lot of work, and she deserves her commission. I can tell you that. 26. That's a lot of nights spent typing up and showing homes, and and it really comes down to setting expectations. You really shouldn't have to write 26 offers before you start to get close to winning one, or you win one. Like I'd say in my career, there's been like not even a handful of times where it's gone to 8. Or like get around like 5, 3 to 5. Because then you start to figure, because every time you sort of have to adjust. You can't just keep going after the same properties, or like if you want something that's fully done up, well, guess what? You're probably gonna have to get more of a fixer-upper, or something that is fine for now, but it's not. And that's another thing too. Like a lot of people, or a lot of buyers, are now looking. They're like, oh, I want this to be my forever home. Like, no. Just get into the market. Just get in. just whatever you can do to get in, like just do it, because things aren't going to cool down anytime soon. And like it's just get in, because then that
Yep.
money, then you're part of the gravy train that's going, and you're not, you're not left at the station waiting for the turkey, right? So,
Yeah.
all right,
So
yeah.
are you finding, so let me ask you one more question.
Yeah.
With regards to the pre-approvals, are you finding that, like, do you include them in the offer? Do you have a copy of them? Are they worth anything in terms of helping a client have a successful offer?
Well, in terms of having like obviously more documentation is good if you can show them that you're pre-qualified. Usually, or like it's a little tough game, because if you show them that you're pre-qualified, it sort of has an amount on it, and then they see that you're qualified for more of an amount. Whereas like you can send them the letter with that part blocked out, but then what is it worth written on paper, right? So really, again, just like you say, like you rely on the relationships between your underwriter and your client, and getting to know them, and learning how to get your underwriter to do things, and stuff like that. It's the same way for us agents. We have to like be true to our word, because the chances are is we're going to run into another agent. We're going to run into this agent again eventually. Like we're going to have a client that's looking, like their client is now looking to buy from us, or my client's looking to buy from them this time, or whatever. And if you failed on your word, then what does that agent? Your word means nothing. Like,
Mhm.
and that's what it comes down to, is just like having that personal working relationship, and being able to connect with the agents, and being like, listen, like most of the times when I say, hey, I've spoken to the mortgage broker myself, and I've got the down low on all of their finances, and I know exactly where they sit and what documents they need to submit and whatnot. You install confidence in the agent, and sort of like, are they pre-approved? Like as an agent, we shouldn't even be really asking that. Like they should, are like the first thing we say is go speak to your mortgage broker. And if you don't know someone, then we can sort of point you in the right direction. And then again, we start that conversation, because one cog can't work without the other. Like if you can't just go out and search for homes, and because there's one thing I do know for sure, is that the moment you put something in motion, in like just in general or in the universe, it's gonna go. It's gonna happen. Like if you start putting offers in on a house, you're like, and I'll get pre-approved when I get one, because it's such a crazy market. I might lose on 26. What's the point, right?
Yeah.
The point is you could get one. Like that's it, and it will happen, because again, if you're in sales, it's like there's only so many no's you're gonna get till you get a yes. It could be 100, could be 60, could be two. Like so again, it's in order for the home buying process to go smoothly on the buyer side, it comes in conjunction. And you talk to your realtor and you talk to your mortgage broker at the exact same time, if not one before the other. And it could be vice versa. You talk to your mortgage agent first, and then talk to your agent. But like, if you talk to your agent, he's just gonna say, call your mortgage broker. Let's figure out step one. Let's get to base one before we
Yeah.
before we start hitting grand slams, right?
Yeah, definitely. No, that communication and that coordination is huge. And I always say to clients that I either get referred to or come to me, I'm like, you need to be in love with your budget before you can be in love with that house. Because if it's the opposite way around, you might get into trouble, or you might, be house poor. Nobody wants that. Like, you want a house, you want, like you said, get into the market. And it doesn't have to be your forever home. But if you put yourself out there to a point where you can't afford it, the numbers on paper are one thing. When we have our ratios and our stress test, that's one thing. But there's a lot of things that don't come up on the credit bureau, like childcare or caring for an elderly individual, sending money to a different country to support your family somewhere, and that doesn't come out. And if you don't have those questions and you don't account for that, then all of a sudden you are struggling, and that's not a great experience either. So having that direct communication, open communication between everyone, and making sure that everyone's involved. I think the worst thing that people can do is just basically put the broker and the realtor, and as well as the lawyer, kind of the trifecta of
Yeah.
people.
Yeah.
separate them and not have a conversation, that's worse off for the client. If we can have an open conversation and we can problem solve about certain things, then that's great. Like even if we need to extend something or we need a little bit more, something like, it just makes it so much easier. So communication is definitely key. So, as I say, if you approach a realtor first, make sure you go with the person that they refer you to in terms of a broker or a lawyer, because chances are they have a really good working relationship. And if it wasn't a good relationship, they wouldn't have it in the first place, right? So you want a communication that's going to be open, smooth. It's always in the best interest for the client.
Yeah, and that's sort of like, again, as when you work with a trusted realtor who's been in the industry for a while, we start to gravitate towards people that we can get that can get the job done, and we
Yeah.
can handle the transaction from start to finish. Whereas if we have Uncle Joe's lawyer and Aunt Betty's mortgage person, and then grandma's agent, we're sort of like, like, whereas like, again, I talked about the cog, it's for the well-oiled machine. Make sure that on closing date, if there's that surprise, or even afterwards, if there's something wrong, you need that lawyer to pick up the phone. You need that mortgage agent to work his connections with his underwriters and his staff in order to get everything coordinated and done on time. It really is like a circus, to be honest. But like, if the
A boring one, a boring circus.
no monkeys at all.
That's right. That's right.
Yeah. So all right. Well, I think that's it. Thanks again, Yara, for joining us here on this podcast, and we really appreciate you showing up and giving us some more knowledge.
Much appreciated. Always a pleasure, Jeff.
All right, guys. Take care.
Bye.